Foreign capital is accelerating its withdrawal. A large number of small and medium-sized enterprises are closing down. The unemployment rate of young people is high. The real estate bubble has burst, and the local government's finances are on the brink of collapse. This series of problems, like a nightmare, envelopes the land of China. Although there are factors of global economic downturn, the main reason for all of this is the Chinese Communist Party's 3-year strict execution of its zero-COVID policy, which has caused serious damage to the economy and all aspects of society. Now, the CCP is not reflecting on the lessons learned, but instead busy rewriting history, avoiding mention of its zero-COVID policy, and even claiming that this disastrous policy has achieved significant success. In the face of social, economical, and political crises, they turn a blind eye and still paint a rosy picture of the situation. Recently, Chinese financial blogger Lao Man summarized the cost of the CCP's 3-year zero-COVID policy and answered the question of why the CCP suddenly abandoned it without any transition period in December of 2022, after unwavering insistence for 3 years. His summary is very meaningful, and we can draw on its content as well as our findings in this presentation. We also encourage everyone to participate in the discussion in the comments below. The first cost of the 3-year zero-COVID policy is that the government's fiscal deficit has sharply increased, with the fiscal burden increasing by 60%. Let us first focus on the overall fiscal deficit, which includes the public budget deficit and the government fund deficit. In 2019, China's overall fiscal deficit was 5.53 trillion RMB, but by 2022, it has surged to 8.96 trillion RMB, with a 3-year deficit increase of 62%. Looking at the yearly breakdown, China's overall fiscal deficit was 8.72 trillion RMB in 2020, which decreased to 5.94 trillion RMB in 2021. However, in 2022, with the successive waves of city lockdowns and the economy suffering severe blows, the fiscal deficit once again skyrocketed to a historical high of 8.96 trillion RMB. Over the 3 years, the accumulated fiscal deficit was 23.62 trillion RMB. Comparing this to the total fiscal deficit from 2000 to 2019, which was only 21.92 trillion RMB, which means the total deficit from the 3-year zero-COVID policy is more than the total deficit of the previous 20 years. This massive fiscal hole cannot be filled, so the government resorted to issuing local and national bonds, which have drastically increased over the past 3 years. In terms of national bonds, a total of 23.32 trillion RMB was issued over the 3 years, and excluding the amount used for refinancing, the national bond balance surged from 15.83 trillion at the end of 2019 to 25.19 trillion at the end of 2022, with a 3-year increase of 59.1%. As for government bonds issued by local governments, a total of 21.29 trillion RMB was issued over the 3 years. And excluding the new amount borrowed to pay back the previous debt, the local government bond balance increased from 21.31 trillion to 35.06 trillion RMB, a 3-year increase of 64.5%. In summary, China's annual fiscal deficit, national bond balance, and local government bond balance have all increased by approximately 60% over the 3 years of the zero-COVID policy. The sharp increase in fiscal burden will inevitably lead to corresponding consequences. Even if the overall fiscal situation can be temporarily maintained in the short term, problems will eventually arise in some areas. The first area to experience problems is the urban investment bond market. Therefore, the second cost of the 3-year zero-COVID policy is the overall collapse of the urban bond market. Urban investment bonds, also known as quasi-municipal bonds, are publicly issued corporate bonds or medium-term notes with local investment and financing platforms as the main issuers. The funds raised are primarily used for local infrastructure construction or public welfare projects. The companies are usually 100% controlled by local state-owned assets administration commissions or finance bureaus. In China, urban investment companies are the investment and financing platforms of local governments, and they mainly engage in urban planning and construction projects. These companies originated in Shanghai in 1991. Their main businesses include real estate development, property management, urban complex development, and municipal construction. There is no exact number for the scale of China's urban investment bonds. According to reports by Cailian Press, China's mainstream financial media, the balance of urban investment bonds is usually about twice the size of local government's explicit liabilities. As of the end of November 2022, the balance of local government debt in China had reached 35 trillion RMB. So it is estimated that the balance of China's urban investment bonds at the end of 2022 had reached 65 trillion RMB. As we all know, the expenses of local governments in implementing the zero-COVID policy has always been a mystery. The endless mass PCR testing, quarantine hotels, makeshift hospitals, large-scale lockdowns, and ensuring the supply of materials all come with costs that are unknown, and the sources of funding are equally opaque. The author of the article believes that the source of funding is the urban investment bonds, as they are completely controlled by local governments and not subject to supervision by higher authorities. This has also led to the explosive default of local urban investment bonds. In July 2022, the 15.6 billion RMB city investment bonds in Zunyi City, Guizhou Province, could not be paid off upon maturity, and by the end of the year, they shamelessly proposed a plan to extend the term by 20 years, with only interest payments for the first 10 years. At this moment, the various investors who had invested in city investment bonds suddenly realized that the debt of local governments had reached its maturity. Following the Zunyi incident, it was difficult for urban investment bonds to continue to be financed. In the second half of 2022, the net financing scale of urban investment bonds was only 194 billion RMB, a decrease of 85.1% compared to the same period in 2021. Even after the extreme loosening of the financial policy in February of this year, the net financing amount of urban investment bonds in the first quarter was only 505.2 billion RMB, a decrease of 16.1% compared to the first quarter last year. On April 12th of this year, the Guizhou government publicly admitted that it could no longer bear the debt burden on its own, which means that the urban investment bonds have fallen into a predicament. This is a devastating blow to the entire urban investment bond market. For local governments, this is just the beginning of a nightmare. Without the ability to refinance their debt, how will they repay it? Default? It is worth noting that the majority of investors of these bonds are ordinary families who invested in financial products issued by urban and rural commercial banks. Behind these financial products are the most common family assets. This seems to answer another question, that is, why did the urban and rural commercial banks in Henan default on their debts, and why did local governments turn a blind eye to it? Because the money was in fact taken away by the government. These funds are the pension and emergency funds of ordinary people. What will local governments do if they cannot repay them? Will they let thousands of families collectively starve to death? In fact, it is clear that the reason for the sudden end of the 3-year zero-COVID policy was that by the second half of 2022, local governments' finances had become unbearable and were in a state of total collapse. With no solution in sight, the government simply withdrew from the policy without any preparation, even failing to stock up on basic medical supplies. However, according to our research, the initial funding for pandemic prevention, including vaccine distribution and PCR testing, came mostly from healthcare funds. Later, perhaps due to excessive spending and the draining of healthcare funds, the central government ordered that the expenses be covered by local government finance. In other words, the urban investment bonds we mentioned earlier. However, a significant portion of healthcare funds had already been used up, resulting in the third cost of the 3-year policy, which is that it became even harder for the public to access medical care. Due to the shortage of healthcare funds, the Chinese government has implemented a new round of healthcare reform since the beginning of this year. Firstly, they significantly reduced the proportion of personal healthcare account funds to increase the proportion of consolidated funds. In February of this year, the white hair movement, rallies by elderly Chinese, erupted in Wuhan to protest against this policy. Secondly, they have limited the reimbursement amount for each hospitalization, which means that patients can only be reimbursed up to a certain amount and must pay for the rest out of pocket, even if they suffer from a serious illness. According to information we have obtained from inside Chinese hospitals, doctors not only have to prescribe medicine but also have to calculate fees for patients every day to avoid exceeding their budget. In order to cope with this policy, many patients immediately apply for discharge as soon as their expenses reach the limit, and then reapply for admission, creating many obstacles for patients seeking medical treatment and unnecessary work for doctors and hospital management. The fourth cost of the 3-year zero-COVID policy is the complete collapse of government credibility. Forced lockdowns of residential areas and fire exits, vague and sudden policy changes such as saying there won't be a city lockdown in the morning and imposing one in the afternoon, forced entry and disinfection of homes, exorbitant fees for quarantine hotels, citywide food shortage, corrupt PCR testing processes, overcrowded hospitals and dying emergency patients, blocked airports and high-speed rail stations, school shutdowns and students unable to return home, prohibition of farmers from working in the fields, accidents involving transportation buses, there are just far too many to count. At the end of it all, the sudden cancellation of the policy without any explanation overnight made it seem like the absurdity of the past 3 years never even existed. The people witnessed all of this and kept it in mind, and their collective reaction will be forthcoming. Young people in particular have adopted the mindset of "we are the last generation" and are generally apathetic. In summary, many people no longer believe anything the government or experts say, which is the biggest backlash. This consequence will be quickly reflected in economic data, recovery efforts, and the implementation of economic policies. The complete loss of government credibility also means the loss of mobilization capability, making it impossible to inspire public confidence in responding to the economic crisis that lies ahead, which is the greatest damage to the CCP. The fifth cost of the 3-year zero-COVID campaign is the collapse of the birth rate. With the unpredictable nature of government policies and a loss of confidence in the future, it is impossible to maintain a high birth rate. Under the harsh lockdown measures, the younger generation has voiced their slogan, "We are the last generation, thank you." This has created an unprecedented resonance. As a result, the number of births in 2019 was 14.68 million, which decreased to 12.03 million in 2020, 10.62 million in 2021, and only 9.56 million in 2022. It is foreseeable that this trend will continue to decline. The sixth cost of the 3-year zero-COVID campaign is the accelerated withdrawal of foreign businesses. As we have reported multiple times before, not only have European and American companies withdrawn from China, but large OEM companies such as Foxconn have also gradually transferred their production capacity to India, Vietnam, and other Southeast Asian countries. With the acceleration of foreign enterprises' withdrawals, private enterprises upstream and downstream of the supply chain have no choice but to shut down, and more employees will inevitably lose their jobs. These unemployed individuals cannot find suitable jobs and can only resort to delivering food and driving for ride-hailing services, which has driven the express delivery and ride-hailing industries to a level of cutthroat competition. They no longer have faith in the government as a whole and feel deeply wronged, which will undoubtedly create a huge social burden and give rise to various social incidents that will harm either themselves or others. This will be a nightmare for the entire country. The seventh cost of the 3-year zero-COVID policy was the collapse of people's faith in the future, leading them to stop borrowing to buy houses and thus causing the real estate bubble to burst. The first impact of people not borrowing to buy houses was a wave of debt defaults among real estate developers. In 2022, nearly 40 of the top 100 real estate companies in China experienced cash flow disruptions and were unable to pay their maturing debt. As for small and medium-sized real estate enterprises, the number of those with cash flow disruptions were countless. In fact, many of them had already gone bankrupt in practice, but were prevented from going through the bankruptcy process due to policy controls. The second impact of the continuous defaults by real estate developers was a sharp decrease in land transfer fees, which was a significant source of income for local governments. In 2022, the national land transfer fee income was 6.685 trillion RMB, a decrease of 22.3% compared to 2021's 8.7 trillion RMB. The real estate industry contributed more than 50% of local government revenue. The sharp decline in the real estate industry's contribution was something that local governments could not afford to bear. The real estate industry is a pillar of support for local finances, and no other industry can replace it. Now that this pillar has collapsed, local finances are in crisis. The collapse of urban investment bonds has also become an issue, and net financing capacity has fallen sharply. If the real estate market cannot bounce back in 2023, it will trigger further chain reactions that will directly crush the bottom line of maintaining fiscal balance for local governments. This consequence is simply unbearable, and local governments will definitely try every means to prop up the real estate market. However, it is still unknown whether it can be achieved under current circumstances. Of course, the cost of the 3-year pandemic campaign is not limited to the above, and ultimately, every Chinese person will pay for it. The lower class resentment is accumulating, and China is now like a pressure cooker full of steam. When it erupts, it may be the time for the collapse of the CCP regime.